This is Ethics or Profit, Part 2. Do managers feel pressure to put profit first? Most managers' income is tied to their performance, and the key performance indicators, or KPIs, by which they are judged are invariably financial rather than altruistic. A UK report entitled Management Agenda 2015 asked 1,600 managers and workers whether they felt pressure to compromise their company's ethical standards to meet business objectives. 1/3 of respondents reported that they had. They said that the most common pressure was a need to follow their manager's objectives, followed by overly aggressive financial or business objectives. The report's authors, the Roffey Park Institute, believe leaders may not realise their instructions can be interpreted in this way. They suggest that the most ethical managers in practice are the ones who consciously take the time to think their decisions through, while others may simply not have time to do that and are not aware their decisions may have undesirable consequences. The report also identifies a gap between an organisation's stated values and those practised by their management, so a difference in policy and action. The Institute of Business Ethics agrees with this findings and say that employees do not trust their managers not to cut corners to win business, even at ethical companies. They believe this may be a training issue and that people are not aware of how the business expects them to behave. Organisations who do have ethical policies need to ensure that staff are given clear guidelines and told how to apply them. They need to understand that they should make ethical decisions and will not be penalised, even if it costs the company money or means a target is missed. Staff need to trust that this will be the case. To some extent, this depends on all leaders buying in, because there is even one leader who varies from the policy, trust will be lost. If there is just one person in a leadership position who is unethical, the whole company can be compromised. This presents problems for a management team who have appointed a manager who does not behave ethically. The situation can be addressed by clear communication about what is expected of management in terms of ethical decision-making, and reinforcement that ethics should always take precedence over profit. So, what areas should ethical policy cover? Let's have a look at the different areas of a business and consider how ethical policy may impact it. Let's look at human resource policies. Paying the legal minimum wage or above it, not using child labour, fair working hours, workplace safety and health and safety policies, breaks during the working day, paid holiday entitlement, healthcare and family healthcare provision, staff discounts, family-friendly policies, help with childcare costs, pension provision, looking after staff in retirement, employing disabled people, equality of opportunity. So how might ethical policy relate to relationships with suppliers? Well, there would be fair trading practices, fair and transparent negotiations, honouring agreements and contracts, prompt invoice payment, monitoring supplier ethical compliance, discouraging bribery and corruption, advising new suppliers how best to work with the company. For the sales and marketing department, it would involve true and fair advertising, fair pricing, concern for product safety, transparency on ingredients, or respect for customer privacy. For the production department, it might mean concern for environmental impact, health and safety policies, careful waste disposal, and not participating in testing on animals. For finance, it might mean a true and fair view of accounts, political contributions, looking at tax avoidance, directors' remuneration, and the dividend policy. So how does a company ensure its ethical policies are enforced? Despite these policies, we frequently hear stories of ethical misconduct, misappropriated finance, broken contracts, unfair labour practices, bribery and corruption. So how does a management team ensure its policies are understood and interpreted correctly? They need to communicate regularly with staff, restate the policy, ensuring guidelines are well understood. New recruits must be trained in the detail of the policy. Some companies insist on annual ethical training for all staff as a condition of continued employment. Someone in the management team should own the policy and be able to discuss contentious issues and offer guidance and interpretation to managers who request it. Managers must strictly monitor compliance and ensure deliberate violations have consequences that are visible to everyone. Ethical policies and practices don't of themselves guarantee success, but it is likely in today's culture that companies that do not have them are less likely to succeed.